Happy Thursday out there, folks. This is Darius Dale here to present our macro minute for Thursday, September 8th, 2022. Starting with asset markets, we have stocks down this morning, commodities up, crypto down, dollar up, global bond yields up. So big day today for central banks, particularly across the pond of the Atlantic here, dueling policy discussions. So we have the ECB's policy meeting, followed by Madame Lagarde, or the ECB president, press conference. And so the ECB unanimously hiked its benchmark policy rate by 75 basis points to 0.75% for the deposit facility and 1.25% for its main refinancing operations. The statement described today's move as a major step in front-loading the transition towards a more neutral policy stance. It also says that rates will rise further to damp demand and anchor inflation expectations. The ECB further slashed its 2023 GDP growth expectations to 0.9% from 2.1% prior. It demonstrably raised its 2023 inflation forecast to 5.5% from 3.5% prior. So big jump in inflation expectations, at least in forecasts from the ECB, and big reduction in the growth outlook. Lagarde, during her press conference, said the ECB has an eye on the level of the euro, saying depreciation has added to the buildup of inflationary pressure, and that risks to the inflation outlook are primarily to the upside. Euro's trading off this morning. It was mostly flat during the statement period, but now trading down with Powell continuing the phase 3 hawkish commentary at the Cato Institute. So Euro's off 0.5% this morning to down 2.4% month over month. 10-year nominal German Bund yield up 10 basis points this morning to 1.67%. That's up 72 basis points month over month. So markets, at least on the bond side of things over in Europe, are definitely taking the hint as it relates to the tighter policy outlook for the ECB. But certainly from a currency war perspective, the euro continues to lose. And I thought this was a really interesting comment. Madame Lagarde signaled that, hey, look, the ECB is well aware that the policy setting is still technically in accommodative territory relative to their estimate of R star, and they're working hard to get it to at least to neutral. But she would decline to sort of acknowledge the fact that it probably need to get into a restrictive stance, and that's partially why at the margin the euro has been such a dog of a currency recently and throughout the last year or so. Anyway, shifting gears. So Powell is speaking at the Cato Institute. Cato Institute, for those of you who don't know, tends to lean a little right as it relates to economic thought and monetary thought. So he's kind of going back and forth with the guy there. It's an interesting conversation if you want to tune in after this. But Powell said the message he delivered to Jackson Hole this last month was that the Fed accepts its responsibility to quell inflation, and that history cautions strongly against prematurely loosening policy. So we continue to hear that. Phase 3 equals tighter for longer. He said what Paul Volcker did to bring inflation under control followed several failed attempts, Arthur Burns, that had contributed to the public thinking high inflation was the norm. The public really came to think of high inflation as the norm and expected it to continue, which is what made it so hard to get inflation down in that case. When questioned about political pressure to end the battle against inflation prematurely, Powell remarked, "We never take into consideration outside political interests, except in 2020." But that's neither here nor there. We are moving this morning in crude oil terms, getting a nice little bounce off the washout it's experienced week to date. Crude oil WTI up 2% day over day to down 5% month over month. Shifting gears to our risk management. So getting into volatility adjusted momentum signals and probable ranges. U.S. dollar index, that's bullish VAMs, not quite oversold there, or not quite overbought in the middle of the range there. Gold bearish VAMs in the middle of the range there. 10-year nominal treasury yield bullish VAMs in the middle of the range there. Bullish VAMs credit spreads getting towards oversold territory, 11 basis points of downside versus 62 basis points of upside. S&P 500 neutral VAMs, not quite in the middle range, but not quite oversold either. Bearish VAMs VIX, not quite overbought, but not quite in the middle range, but not quite overbought either. Neutral VAMs NASDAQ got about 2 to 3% downside, 7-8% upside. Neutral VAMs Russell 2000, 2% downside, 7% upside. Bitcoin bearish VAMs in the middle of the range, very, very tight, narrow range. It's something I've been seeing commentary about Bitcoin being in one of the narrowest ranges it's been in a couple of years. And I saw the commentary was like, well, it's about to explode higher. Leverage is building up, and maybe that's all true. But when you just look at the chart, the last time we were in a very narrow trading range, we had a significant decline here and a narrow trading range, and then had a significant decline here. So I wouldn't necessarily take that as a sign that things are about to go berserk to the upside. I certainly am not saying it's a bearish leading indicator either, but just be careful when you read some stories like that. Definitely want to actually study the time series to actually get clues as opposed to taking a journalist's word for it. Anyway, bearish VAMs, Ethereum nearly overbought here. Shanghai Composite, neutral VAMs in the middle of the range. WTI crude oil, bearish VAMs in the middle of its range. And then ag, bearish VAMs, middle of the range. Industrial metals, bearish VAMs. I got about 2% downside, 5% upside there. So with that, Darius Dale presenting our macro minute for Thursday, September 8th, 2022. Best of luck out there today. And oh, by the way, I watch all these YouTube videos. Everyone's like, subscribe and like the smash button or smash the like button, subscribe, do all that good stuff if you like us, and we appreciate you. So cheers.